Good morning and welcome everybody back to Schwab Coaching. It's our Monday edition of Trader Talk in today's market. I am your host, Kevin Horner. It is a beautiful and sunny morning here in Denver, Colorado on the heels of an immense amount of snow. I'm very pleased to get back to business, though, with my friend Michael Urizzo, Schwab's regional investment strategist. Good morning, Mike. It's great to see you, buddy. How you doing?
Very good, Kevin. Great to see you as well. Always happy to be here on a Monday morning with everyone.
Yeah, we're going to get into a number of great topics today, of course. The market is moving yet again. Had a great finish to the week last week. It looks like a bit of a continuation move thus far. We're going to look at a number of charts with all of you, as we often do here in Trader Talk. So let's set the table. Take a moment and say hi to my friend Cameron May in chat. He's going to keep an eye on all of you and engage, of course, answering questions where Mike and I are unable to get to those, of course, but we're also going to try and bring your questions into our discussion as we do. Follow Cam and me on X, please, at Cameron May CS and at Kevin Horner CS. And if you like our content, we'd really appreciate you hitting that thumbs up button down below at the conclusion of the segment. A couple other notes. Yes, we want to wish all veterans and those who serve a happy Veterans Day. Thanks to all of you for your service. Additionally, as a reminder, I believe today, Mike, is a non-settlement day as a result of this. So you might witness. Now, granted, we're at a spot now where trades settle in one single day, which is wonderful comparatively, but it is a non-settlement day. So securities liquidated on Friday are not going to be cleared assets on Monday. So just bear that in mind, everybody. Okay. So let's get to our disclosure detail. Remind you that our discussion here is exclusively informational and educational. Simply put, we do not make recommendations. We do not endorse a particular strategy or approach to trading the market. Also, we talk technical analysis here quite a bit. That is an important reminder about technical analysis is that we think of it complementary in nature to your fundamental research, meaning simply just a piece of the puzzle here, everybody. Make sure that you're considering it as such as well. And bear in mind, finally, we work in our paper money platform, the version of Think or Swim that allows you to get familiar and comfortable with this tool. Remember that this platform, the paper money version, if you're trading options, one key difference in trading options and paper money, you cannot be assigned early in paper money. Now, that is a real life scenario that can occur for those of you trading options in your real accounts. So you do need to be aware of that when you're working there in paper money versus the live money platform. And as we do here, top-down methodology, everybody, we're going to start with our broadest indices and work into some of the moving sectors and groups as well as individual equities in the market. That'll be our standard conversation today. I got a couple of key details to make you aware of here today, just something that I want to share in Think or Swim regarding the watch list that can maybe help some of you in the mornings as you're setting your own table to see what you're going to be paying attention to on a given morning. Got some ideas for you there. And then lastly, just bear in mind, we are making a number of events available to all of you here. Check the schwab.com/events calendar. Nearest one coming up is in Miami. I will actually be out there in a couple of weeks for all of you. Looking forward to being there for the Market Drive event. But if you go to the schwab.com events, you're going to find all of the, not all, excuse me, but a portion of the events for which we are already slated in 2025. So you can check those out and make note of those because your registration windows will start opening up as we go forward here a little bit. Okay, so let's get to what everyone wants to talk about today, Mike. Looking at the S&P 500 here, let's eliminate my order executions of the S&P. Man, we just took out that resistance spot, those prior highs in the middle of the week, of course, on the heels of the election at 58.70. Mike, we are through 6,000 on the SPX. A fantastic move here.
Yeah, without doubt, right? We've been talking about this obviously for quite an enormous amount of time. We just keep hitting these new highs, maybe pulling back very lightly, and then kind of regrouping and moving forward. Clearly, last week, right, the market just kind of proved that at the end of the day, I think regardless of what the outcome was going to be, the kind of quickness of the surety seemed like what the market really responded to, and that's kind of normal, right? The market likes to have a unknowns unpacked, right? It doesn't like uncertainty. Sure. We kind of got through that uncertainty. So now it's kind of seems like it's been business as usual and we're charging forward. And obviously there'll be a lot of speculation as to why, but I think if you look at the trends prior, this kind of seems to fit that mold of uncertainty is cleared. We know what the next steps are and the market just continues to move higher and we're seeing the multiples increase.
Yeah, we really are. I mean, yes, the lifting of the election from overhanging us is part of this. The fact that the election decision happened on a quick basis as opposed to lingering for multiple days, probably having a little bit of an impact. Mike, if we were to do just a standard measured move calculation here, would it be as simple as saying, boy, we were at 5,700 and let's just call it 57 for round figures. That was our low trade in here right at the 50-day. Then we had the top of the range at 58.75. Is it as simple as adding 175 points to that and suggesting that we have the potential to target somewhere in that neighborhood? Like, what would that be? About 6,050 points on the total of the SPX? Does that sound right to you?
Well, being as we're sitting right where we are as we speak, it seems like it's just a matter of a few ticks, right? So yes, it's definitely plausible. It's always good to have that kind of measured move, and I think this kind of proves the point, right? We look at those measured moves. Sometimes it happens very quickly when we get that uncertainty cleared, and this seems like an example where it just made that move very quickly. Here we are, and now in a bond markets closed today, right? So we have a little bit of a quiet kind of economic front. We have half of some components of the market off. The kind of activity we see today, obviously the market's moving higher, so it's getting the follow through. But it wouldn't be surprising to maybe see a little bit of a stall here, to your point, because you're all kind of at that measured move, or really, really getting very close to it. Because like I said, it could be 9:30, we could be there within a few ticks if a few stocks kind of fall in line.
You're absolutely right. We are what seems like a stone's throw away here. 35 SPX points are not what they once were. When we are, as the higher we climb, it's kind of like we saw in the Dow last week, right? We're over 40,000 on the Dow, and when I got going here, the Dow was somewhere in the neighborhood of like 8,000, if I'm not mistaken, back in like the late 90s. And we had 100-point days, and those days were enormous. And we had a 1,200-point Dow day last week. And percentage-wise, I mean, it's a great day, obviously, but it's not what it once was. So obviously, we need bigger numbers if we're talking about percentage moves that rival the all-time greats. Now, Mike, there's one other option here. And granted, we know that measured move calculations are by no means a guarantee to be achieved. I say it all the time. It's just a way that traders gauge potential levels. Another way, as a friend Wiley's asking about, is potentially looking at Fibonacci's. If we wanted to do this, we could certainly just look at our most recent move here from the peak down to the lows, and we could just talk about, and again, this is a very short-term way to consider targeting a zone of potential resistance. And it's just taking your Fibonacci's and drawing it down to the low that you saw in the window. Now, what you see here immediately, Mike, we're already through the first extension on that. Where's the second one? Well, I'd have to shrink my range down to find it. And it's up there at 61.53. Once more, is it a possibility we get there? Of course. Does that mean we have to? Absolutely not.
Yeah, and I guess, I don't know if it's ironically or this is just the way things kind of work out, right? But if you look at a lot of the analyst estimates earlier in the year, and especially right now, right, 6,200, 6,300 is kind of the year-end target. So we're pacing kind of right there, whether it's, a self-fulfilling prophecy because it's out there and the numbers are there and the market's doing well and it's going to gauge there, or this is actual, economic factors. We'll find out this week, right? Because there's a lot of economic activity this week, later in the week, to be mindful of. So today's like a setup trade, I think, for the week.
Interesting. Okay. Well, we don't know if the Fibonacci's are going to prove to be valid or accurate for us on the SPX, or if the measured move holds reasonably. But one of the things that a trader makes note of course, is the break from a range, and then can we start trending against it, and just how long we can start trending. And a lot of traders will use those shorter moving averages for that. Maybe that's the 20-day, everybody. But for some traders, it also might be something very speedy, like the 10-day. And I just wanted to illustrate real quick, and then we'll move on, where that 10-day is. Even the 10-day is far away from where we are from support. So what I'm getting at is, if you're utilizing a moving average and wish to be a seller on weakness, you're going to have to be even faster than the 10-day, Mike, because of the speed and the excessive move we've seen to the upside here, the explosive move, I should say, has put us in position to potentially be trending. But if you're a trader who's selling on weakness, Mike, you're going to have to base it on something maybe different than even a moving average here, because they're just not caught up with price action yet.
Yeah, and I think you're alluding to kind of it's also making sure you're identifying yourself. What type of trader are you? Like, what type of timelines are you working with? Because you don't want to
Yep.
get mired in all these different time frames and seeing signals that might not match your strategy, so to say. And I think that's
Yeah,
kind of what you're alluding to. So that that 10-day moves so fast. So to me, it's kind of like, well, I would expect a little bit of a reversion, right? I think traders would expect it to kind of come down a little bit. The question is, where is that next move down, and how measured is that from here?
Mhm.
And like I said, with the activity we're going to get this week, I wouldn't be surprised to see a little bit of choppiness, a little volatility in those numbers, but kind of, helping smooth out what our next level is.
Yeah, yeah, absolutely. So again, evaluate who you are as a trader. Do you like to sell on strength? Do you like to sell on weakness? We are all different in that approach. But I just wanted to point out that selling on weakness here could mean giving back a fair bit of our moves before really getting signals. Last note you might use is maybe a close below the high day or the low of a high day. If today is our high day, for example, and we start trading below today's low tomorrow, then that might be that first entry signal where a trader says, all right, we are due for that pause. Maybe this is the point of pause. We are far from that, at least at this moment, given the rally we've seen. Let's see how the NASDAQ's acting here today. Certainly a little slower in nature today here, Mike. However, when you look at the NDX, the chart is certainly notable. Not as big a move, but we had a fantastic 3-day rally on Tuesday, Wednesday, Thursday, the move we made to the upside. Friday was more of a pause day after 3 great straight candles in a row with 2 massive gaps in there. Mike, what are you watching here on the NDX?
Yeah, I think it's interesting, right? I mean, the NDX was kind of leading most of the indexes. Definitely the earlier portion of the year was kind of that front runner of the indexes, and we've actually seen the SPX actually kind of outpace that, right? Just by a little. So the S&P on the year is just around where the Nasdaq is. We've talked about this many times in sessions, and I'm sure you've had this with other folks as well, right? Is the sector participation, the overall market participation that we started to see change, I think kind of around like maybe May, June, you started to see some sectors that were picking their heads up. Now utilities are making a charge, and there's a lot of obvious reasons. Again, a lot of uncertainty about what or who. Now it's like, okay, now that what or who is behind us, how is this all going to have factors? So I think, I'm continuing to watch. Obviously, you're going to get to it in a second. Some of the small and mid caps that are participating really, really nicely. But yeah, I think NASDAQ, right, we're seeing a little bit of a transition. We talked about SMSCI a little earlier, right? Everybody's watching NVIDIA and Apple. Palantir is kind of like quietly starting to kind of show like maybe this is the next, stock in the sector that's going to get some participation as the other ones take a breath. So is it moving money out of one or the other? Is it moving money across sectors? I think we're seeing a little bit of everything, honestly.
Yeah, I kind of agree with you, to be quite honest, as well. Yeah, the shift we saw here, the building of the triangle in the NASDAQ was essentially the consolidation window, right? After a massive move to the upside. We can illustrate that just by adding a little bit of time here. Let's make this a little longer. We'll go to 2 years, and I'll just point out, if we just went to the bottom back here, now granted, that is December of 23, all right? December of 22, that is. So we are looking at a pretty healthy move already. The pause windows have been kind of limited, though, right? We've had this one in here. This was a significant one, right? You had a nice little channel, found the 200-day. You had a bit of a pullback that didn't find the 200-day there, but it did find horizontal support here. And then you had the big drop where we had the week open on that 5th of August, if I'm not mistaken, right at the 200-day moving average. But we get moves like this all the time, and it's the how we manage things in the interim that's really important for us, but additionally, how we evaluate what is happening outside of this one. Again, component makeup has a lot to do with why we experienced all of this since July, all of this back and forth is consolidation, while the S&P during that window made that continuation move to the upside, right? We were being driven by some of those defensive groups while the NASDAQ has been in the midst of its short-term breather here. So breaking out looks like a pretty healthy breakout at this point. What we want to see is either holding the rally we've pushed here, starting to continuation push, Or do we get thrown back to our breakout spot at around 20,700? That might be an offering for new investors to step in a little more comfortably, Mike, on the throwback. We often see that from a technical analysis standpoint here. All right, you mentioned it. I'm going to throw you up to the Russell here. Look at the Russell yet again, Mike. The moves here have been tremendous. We've talked about the stair-stepped approach of higher lows along the way, and last week's action broke that ascending triangle with some substantial conviction, and today it's getting a continuation pop.
Yeah, I mean, this is my favorite conversation with you, right? I mean, we talk about it obviously every Monday. I'm sure you talk about it with others as well, or maybe it's just exclusive for you and I. But I think we started this conversation way back in October. If you go back a little bit, way back last October, honestly. If we go back to like maybe a weekly or something, just a little bit longer trade, you see that huge range-bound area that we were talking about for quite some time that it's broken out of. Not only did it break out of it, but it made that second leg, and now it's touching the top of the next range-bound area, some consolidation before. So, it's quite an impressive chart, to be blunt.
It really is. Now, Mike, when we do this, the challenge inevitably is looking at stocks and groups like this, making or testing highs. The challenge can be to just assign, well, it's high. We go back to our favorite axioms. New highs are typically not bearish, and yet we still have to be aware and we still have to know our own personal levels so that we don't put ourselves head over skis, right? We need to be, if we are traders, we need to be looking for our opportunities for profit taking and proper positioning of our existing trade portfolio and the balance of cash with which we want to work. So, Mike, are there traders who might be looking at taking some off, given the nature of the speedy move we've seen in the Russell here? I mean, at some point, a breather has to come into play, one would think.
Well, I think any pragmatic trader is going to definitely be, whether they take the trade off, I think they're always going to be adjust their risk, right? So whether that's trimming the position a little bit or maybe bringing those trailing stop orders up some way, some form, you're cognizant of that you're trading at all-time highs. You want to stay with the trend. We have a lot of momentum in the market right now. So if you want to be a trader that stays with your trades, but still is pragmatic with your risk, right? You have those kind of two options. I could take a little off the table in the position, especially if I see opportunity somewhere else in the market to move that money. But even if not, maybe, there's nothing wrong with, taking a little off the table, having some cash for, those next waves in the market if you get an opportunity to cost average down. But bluntly, sometimes it's buying into momentum again that we've talked about before. So I think it really just goes back to what your core strategy is and making sure that you have really defined rules and then adjusting those rules as new information comes in. So, yeah, I think this has had a tremendous move. I mean, if I'm looking at this chart or anything, you're kind of seeing such a hyperbolic move, and you've seen that kind of trend before. My first instinct is, what caused that previous high? What was the information in the market? What was going on in the world at the time? What are the differentials today to maybe see if this is a move that can continue, or maybe this is worth taking off the table because maybe we're kind of touching the top of the highs here.
Yeah, all of which could happen. We don't know, right? So as always, our encouragement is to, rather than knowing the market, because it's tough enough to know the market, right? We just need to know ourselves. I think that's the biggest challenge. If we know who we are and how we're going to handle things, this is going to make me feel better, even if we ran through that resistance and kept going. If I had only 70% of what I have on the table today, I would still feel more comfortable than if I left everything on, for example. If you're saying those things to yourself, then by all means, put yourself in the position of comfort, whatever's going to give you the most comfort. That's the encouragement, I think. All right. So there's a look at our S&P, our NASDAQ, our Russell. Okay. The skunk today.
Just real quick, Kevin, there was still a question about the Russell there, and somebody just said, what if it did touch its all-time high? Would that change your opinion, or would it change your thought process as a trader in the market?
I mean, if it touches it, I'd like to see it blow through it, and some traders, if you're looking at this from an investment standpoint, let's say you actually have some sort of investment, either a fund or something like that suggests, you tested this price. Maybe some traders have a limit out there, Mike, to try and sell 10% of their position size at the all-time high, because it's not uncommon to get there and then lose steam, right? There's probably going to be a number of orders and volume there ready to take on any people willing to sell at that spot, would be my thought.
Yeah, and I think, I would agree with that, of course, right? I think also part of that too, as a trader in the market, you're kind of looking at this and you're like, well, what was your expectation of the stock price when you bought it? What was it? What was your expectation a week ago, 3 weeks ago, a month ago, as you're digesting this information? So really, you're not surprised when it touches that high, I think is my point, right? You're expecting it and you have a protocol to what to do next, unless there's new information to make you sway. So I think it's kind of, we talk about our gut instincts, right? As a professional trader myself, and one of the things that you kind of built in, your gut instincts are just your quick, response when you see something, because you're just tuned to it. So I think it's like, what's your gut instinct when this thing touches a high? What was your process before? And why are you thinking of changing it right now, or going against the grain, so to say, of what your protocol is, making sure that there's really good, important information. It's not just an emotional decision, is my point.
I love that point. Thank you for hitting that one, because you, as well as I do, trading with emotions is probably the least appropriate way to go about it, right? If we eliminate or reduce our emotional tie to our trades, to our investment dollars, we're putting ourselves in a better spot to make at least proper decisions, right? We don't want to be making hasty decisions, which is why we talk about this stuff as frequently as we do, because the belief is continuing the drumbeat of discussion and conversation should allow you to do something similar internally. Put yourself into the most comfortable position, recognizing that while X might occur, so could Y. And if Y happens, how am I going to handle that, rather than how I'm going to handle it if X happens? So just the acknowledgement that there's a balance here, right? We have a good chance to continue higher, but we have just as good a chance to meet some resistance at some point. Where will that be? We don't know, but we do know that if it happens, it's going to impact a portfolio pretty commonly, right? And we want to be impacted to a point of our own personal comfort. All right, so Mike, the I was trying to kick us off to was the idea that the one area that I just don't know about today. How about the semis? Down 2.75%. Mike, we've been talking about this little triangle. I say little, it's actually a massive triangle here. Look at the depth we're talking about from 59.31. If I drew that line to the lows down here, it is a big move, everybody. So the high to low was down about 28%. And it was a very speedy move, Mike. It only lasted 20 some odd days. 19 sessions is all that took. So that was a month, and we were down 28% here. Now, we're still in the triangle, but we are figuring things out. It's just that we've come to a near apex on this thing, and we've got all of those major moving averages stacked right on top of each other.
Yeah, absolutely. And I think when you look at indexes, and I think we've talked about this before, it's like, maybe it's worth taking a little bit of research and be like, what stocks in the index have done what over the last course of 3 months, 6 months, a year? What are the fundamentals of those? What do I think that can do? And you can start to kind of, think about, where could this index possibly go next? Whether your bias is up or down, it's irrelevant, right? It's that fundamental research that you're going to do to kind of pair with some of these technicals. It's almost like a back test, it's that back testing your technicals a little bit to make sure that these levels you think you see in a chart could actually be probabilistically achievable. And I think the probabilistically achievable part is what I focus on a little bit. We could get it really, really deep into the statistical weeds, but when you're making these decisions, you're looking at a chart. Just because you see the chart and you think it's going to make that move, do the probabilities match that? Are you using probabilities to make those decisions? And I think that's how you could really use the power of the technical analysis to kind of plot your course for, I guess, no pun, but maybe.
I like the sound of that nonetheless.
Yeah.
So we're still kind of mired here in SOX, meaning simply no real directional heads up just yet, because we're not outside of the triangle. And that means that the move outside the triangle is where we're going to get some heads up. So that's what we're waiting on the SOX. It's kind of a rough day, down 3%, but nonetheless, we still are in the triangle for the short run. Mike, let's look at some of these individual groups that are moving. But before we do, one of the things that we often hear about here, or at least I often hear in many of my segments, is wondering about stocks moving pre-market. And I thought I would just share a little heads up with you all. I'm going to just bring you to the heads up that I've got a watch list here. So I've loaded a separate watch list. I've got a separate column under public for pre-market movers. It's actually not public, excuse me. It's under lovers and losers. So you can use this both in the after hours for post-market and then the pre-market movers list as well. But here's the key. You need to go in and update your columns, everybody. So one thing you can make note of in here go to your columns, go to customize. You probably want to see mark percentage change. Mark percentage change implication here is that you're getting the most recent price action, the last true trade. You might also keep bid and ask in there. And then recently, there's been some updates to closes. So you could always throw in yesterday close here as well, so that you can maybe keep an eye on yesterday's close versus the current price, all right, along with the bid and the ask. So if you were looking just to see what were the major movers today, I've got this sorted by the mark change, all right. There's a couple of movers on here. Here you go. MicroStrategy, for example, up about 11%. Pre-market, the mark column is going to be updated, everybody. So if you're looking to see what is active in the pre-sessions, this is a great way to go about it. Just customize your columns so that you can get the detail for which you're searching. But more than anything else, it's that mark change, everybody. I think that's what you're looking for. So wanted to bring that up. I thought that was a pertinent detail to highlight, because I'll tell you what, when I came in this morning and looked at my watch list, Mike, there was a lot of green on the screen this morning, and I needed to dig a little deeper. This is how I did it. So hopefully that's helpful, everybody. Okay, Mike, sectors moving around today. We do have a nice little pop here in discretionary. I have a feeling I know why. We're going to look at it here momentarily. But Mike, again, discretionary in general just exploded over the last week here. Your thoughts on what's maybe the catalyst behind that?
Yeah, I think the catalyst is what was going on in discretionary prior. We've been talking about this for a while, too. It was kind of odd to watch discretionary over the course of the last few months start to pick its head up, and you started to see some rotation into that sector. So, obviously, whatever, there was a bias into that sector a little bit, and now we're seeing, now that the fruition has come to fruit, so to say, now we're seeing that extra move. But I mean, it was kind of curious how it was even getting up into that 1624 level that you got down there, the previous kind of highs, with that previous resistance a little bit prior. So this has been like a building block. So it's not surprising that you put a strong foundation in on a chart, you get that big explosive upside. Kind of same thing we saw in the SPX.
Yeah, it has been a huge move. The flagpole, pardon me, if we take today's price action into account, the flagpole is pretty substantial, about 10% or 165 points on this particular sector. You'd be looking to set a flag in here by consolidating, going a little sideways here, if we are in fact, going to get some continuation from this. But another gap move today puts us with a short-term area to monitor, right? We hope to hold the gap level there in discretionaries. And if you looked at it on the weekly, you can see that we just with yesterday or last week's move took out the previous all-time highs. Kind of had this look of a really deep cup and handle here, didn't it? With the handle being nice and small over the last, say, 5 to 6 weeks there before last week's explosion. But some really nice moves nonetheless. And that's one of our leaders today, along with financials. Thought we could look at the financial space here. Mike, I think that this has been popping as a kind of a benefactor of the yield curve improving over the last 3 months or so.
Yeah, like I said, I mean, we had all these things over the last 4 years, 5 years that have been hanging over our economics of the market, and that's been kind of moving traders around and a lot of insurity, and you see a lot of sharp moves. So, we're not saying, hey, everything's great and we're moving on to better, rosier pastures right away, but it seems like there is daylight for traders in the market, and maybe they're positioning themselves for next year a little bit too. Remember, we're coming out of that October period where a lot of funds start to, move out their losers and dress up their winners and start positioning themselves for year end. Well, this is also an opportunity to position yourself for next year. So I think a lot of traders are probably doing just that. They're seeing some of these sectors that they know, could have a really positive lift next year once some of these economic factors start to actually show light on the street, so to say.
Yeah, and technical aspect here, Mike, if you're a trader, is there much better than seeing, from a trader standpoint, a bull flag that's resolved bullishly within 3 sessions of the last high? That's just enthusiasm, right?
Well, yeah, I think the word for it, honestly, is momentum. And in the market, you do not step in front of momentum. You could cautiously, we we used to have a term, maybe it would be called like feeding the birds, right? Like when you have a long position and the momentum is in your favor, you kind of just quietly walk away and step back and just sprinkle a little bit of food, and the birds will literally follow you wherever you want to go. And I think that's kind of what happens in the marketplace when we get at these levels. Institutions are that bird feeder, so to say, right? They're just going to sprinkle in a little, but once that momentum shifts, they see it happen quicker. So how do we as retail traders kind of use that? And obviously technicals are going to help, and shows like this, kind of help us build out our repertoire for kind of seeing what's about to come. So yeah, I mean, a 3-day move kind of resolve like that, like you said, is pretty remarkable. So a lot of momentum. It's worth watching it though, because when that stops, obviously there's a little bit of a gap there that it could be filling.
Yeah, agreed. We should also take a peek at, one thing, I mentioned the yield curve. Let me just highlight this. If you guys wanted to track this, you can do that here. The 10 and 2 yield curve spread can be monitored with this particular quote, everybody. It's just the 10-year minus the 2-year. So /10Y minus /2YY. Just to give you a quote. That's it. That's all I'm looking at. And then you can pay attention to the number here, 0.089. So we see that we have uninverted the yield curve as of about the last 3 months or so. And you've noted the move in financials has been beneficial since then. So it all kind of stands to reason, at least a little bit. Mike, let's get to some of these stocks in the news this morning. Some names with which we have some familiarity, of course. I thought we could start out with an upgrade on Cisco Systems today. Cisco was upgraded, by JP Morgan to overweight. Previous rating had been neutral. New target here is up $11 from 55 up to 66. The firm sees, quote, further headroom for upside in the medium term, end quote, despite the recent rally in shares. Now, the recent rally here, Mike, has not been small, has it? What a fantastic series of bull flags along the way.
Yeah, I mean, it's getting hard to know what symbol you have in there because all these charts really, really look alike, right? We see a lot of moves. Obviously, some of the bases are different, but the last 3 months of action look very, very similar. Honestly, on a lot of these charts, you're seeing a lot of extended breakouts to monitor. So, definitely seems like the momentum is widespread, so to say.
It is. Yeah. So here's one that's interesting because it's really bucking the trend of its space, as we just saw the stocks collectively off 3% today. And you've got Cisco up 1.6%. But again, the reminder that I like to offer is why some traders pay attention to bull flags in short-term uptrends, Mike. It's because bull flags commonly beget new bull flags, don't they? I mean, just seeing a series of them here, a real deep one initially that found the 50-day, and then it's just been a springboard up. Bull flag, pause, breakout, bull flag to the 20, breakout, no real flag here, didn't even pause, just kept going here. So a fantastic move. Let's see if we can get a little bit of consolidation here over the coming couple of days, allow that 20-day moving average to catch up, but a lot of gaps can make it easy to start setting risk, right, Mike? I mean, we talk about gap levels and the importance that they offer for support or potential resistance all the time.
Yeah, and I think, when you look at the types of stocks, as Cisco especially, right, growth comes in a lot of different flavors, and it comes at different cycles and seasonality. So, just the rate cuts alone and an upgrade and some positivity there, that's what's going to get it to be the bright star of its sector. And, people have, institutions have to put money towards tech stocks, whether they want to or not. So they get to be a little bit selective about how they rotate into these sectors. So, when you see something like this, it's like, well, let's see what happens over the next couple of days. Because again, a lot of momentum, a lot of positivity in it. You have interest rates coming down simultaneous as economic factors are going up. So there's a lot of potential positives to keep this trade moving forward to the upside. So definitely worth watching.
Another one getting an upgrade today, Mike, is Pinterest. I'm bringing this one because it had a real interesting candle last week on the heels of their announcement. So they announced earnings on Thursday after the bell, I think that was 11/7 after market. And you had that basically a straight up doji on the price action on Friday. I mean, the open and close were essentially right on top of each other. Opened at 29.14, closed at 29.18. So it's got the very, very tiny 4-cent body there. But you're getting an update today. The pins was upgraded by Wedbush to outperform from neutral with a new target at 38. 38 would represent a fantastic move for the stock position-wise, Mike. From 30 to 38 would be phenomenal percentage returns. Of course, we always state it. We know that that's no foregone conclusion or guarantee, but a nice update. The firm thinks the company is executing well against its user engagement and monetization strategies, remains on pace to deliver growth and profits in line with their multi-year guidance framework. Wedbush believes the reaction to the Q3 results is overdone, with shares now trading just 11.6 times the 2026 EBITDA estimate for the business. Basically, what you're hearing out of Wedbush is value opportunity. The question becomes whether that plays out favorably, obviously. All right. On the heels of Pinterest, I've also got one in the financial space, Mike. How about Upstart? I don't know if you've been watching this one, but the chart kind of exploded last week. Here today, BTIG is a firm with which I'm unfamiliar, but they upgraded Upstart to neutral from sell. Did not apply a price target. The firm acknowledges that the company's volumes are likely to accelerate further from here, which it says is the key catalyst for the shares into 2025. Now, while not bullish on Upstart shares, BTIG is using a bull case scenario for the stock of significant revenue growth while holding its line on expenses. Even with this bull case scenario, it arrives at a valuation that would only justify Upstart as a neutral rating in their framework. So it is upgraded to neutral from sell, but they are not willing to go to the bullish side entirely here, Mike. I just thought that was notable. And again, the reason I wanted to bring it up is more than anything else, were the levels we've recently achieved. Excellent bull flag that played out here, right to the breakout spot, right? I mean, can you look? Bull flags are not all the same, are they? But when they fall to the former resistance, now potential support, and then break out bullishly, that tends to be a look that a lot of bullish traders are looking for.
Yeah, and I'm a big volume guy. It's some it's more of a momentum and volume trader on the professional side, right? So that's kind of my retail lens still. And we talked about before, who are you as a retail trader? Well, where's your foundation? So my point is that not only do you see a huge upbound move, you have that kind of positive energy going on, from conjecture, but then that volume, I mean, it's exorbitant compared to its average, right? I mean, it's really an exorbitant amount of volume. So that lets you know that not only is there demand in the market, but it's widespread demand across the sector coming into this, or coming into the stock, so to say. So, always watching that volume too to see it, because again, if I see a big down day on that volume, what reversed it, I'd want to know what's going on a little bit more. And again, maybe it's not as much fundamental driven as it is more just, what the conjecture, the chatter, upgrades, downgrades, kind of going through all of that.
Mm-hmm. Absolutely. Nice looking chart nonetheless. Okay, how about, I'm going to have to bring one of the ugly ones, everybody. We're going to give you a downgrade. Have a downgrade for Celanese today. A couple of different ones. And, again, this one kind of fell pretty substantially. We talk all the time, Mike, about a downtrend. Is a downtrend really over? Can it continue to go lower? The answer is it can always go lower. But they had earnings late last week or early in the week, and you can see the reaction here has not been great. I think it was actually late the prior week, excuse me. But the two separate downgrades here, UBS downgrading Celanese to neutral from buy. New price target, this was the shocker, Mike, down from 161 to 97. So that's pretty substantially cut. The company's recent results, weaker market outlooks create more concerns about about the ability for it to manage its debt load. The firm says higher leverage and heightened risk means the multiple for the company will stay compressed for the foreseeable future. That is not a positive, needless to say. So compression of margins, those are terms that we want to pay attention to from a fundamental standpoint. And another downgrade was from BMO Capital, downgrading to underperform from market perform. New target here, $76, dropped from $138. The significant amount of leverage Celanese took on during to make their M&M acquisition, compounded by the addition of capacity in its end markets and weaker than expected macro environment, has now pushed the company to a now skews reasonably negative viewpoint. That was a quote, end quote. So wanted to bring up at least ones because, again, we try to be balanced here, Mike, as best we can. They're not all upgrades. There are downgrades out there as well. But, Mike, we got to look at the big dog on the street, right? One of them that's had the biggest move this week, and the last week, that has been Tesla. And we didn't look at it when we talked about discretionary, but you're getting a nice pop yet again today, up about 5%. And I had a article out of Barron's that was kind of notable, and I wanted to share this with you all. Al Root writes in Barron's that he believes that Elon Musk created the perfect hedge for the Tesla stock by aligning himself in support of Donald Trump. The president-elect is not a friend to electric vehicles, according to Al Root's article here. He has said they are a risk to the U.S. auto industry and has promised to eliminate tax credits on EV purchases as well as emission mandates, which necessitates that automakers build battery-powered cars. But while several EV stocks underperformed during the election, we've seen Tesla explode. It's done very, very well. Clearly, the market is betting that Musk has bought a great deal of protection for Tesla shares. So that's the narrative suddenly here, Mike. And, when you look at the technical break that we've seen here, it is hard to challenge the percentage move we've made here.
Yeah, so without a doubt, right? I mean, I think Tesla was also very, very beat up over the last few years, and some of the valuations that it had earlier, when it was trading significantly higher, haven't really come back to it. So again, as a professional trader, I don't know that depending again on what you're trying to accomplish or what your style is, how much of the long-term information that you just provided makes sense if I'm just looking at the momentum of this stock and I'm trying to trade it. If I'm more of a longer-term investor, I think you take some of that in. But, I think anytime stocks have this type of conjecture that's outside of its regular business, it's really hard to kind of look at the fundamentals and make some assumptions. So maybe that's where technicals could be a little bit more helpful in the shorter term. But yeah, I think it's a challenge. I really don't like to touch anything that has, outside of market opinion, so to say. That makes sense. I don't know how to phrase it right.
So what you're saying is you might be a little less inclined because you want to be able to assign true value to positions. Is that right? And so what you might have here is something moving not so much on true value as it might be moving on speculation of potential relationship improvement for the company. Again, I'm not suggesting that what's happened here cannot continue, but your statement, I think, is just simply leaning into the idea of believing in valuation numbers as much as anything else when considering whether you're going to take an investment for a longer period of time. Is that fair to suggest?
It is, and I think it goes back to what we said also. It's like it's too much emotion in the stock trading price movement. There's too much emotion involved on multiple vectors that I can't just understand bluntly. So It might be something that when I can't understand something, the last thing I'm going to do is throw money at it in any shape or form. But that doesn't mean I have a negative bias either, because I'm not willing to take the other side of the trade. It's just saying that sometimes you have to be, the old adage, right? Some of the best trades you make are the ones you don't take because you recognized risk for your portfolio, and you said not worth it today. Regardless of the outcome, it's still a learning curve. So maybe I'm going to be dead wrong and Tesla goes to 800. Good for everybody that's involved. It's just something that I personally don't want that kind of risk in my portfolio just because I just don't understand it.
Yeah, and I understand that. I understand that viewpoint entirely, Mike. It really comes down to your own comfort, as we often say here as traders. There's a lot of ways to go about trading the market. You don't have to trade the most actively traded securities. I know a lot of traders enjoy that. Mike, one last question is just in regards to the volume here. We often say there's always a question about, is this legitimate volume? Is this volume from institutions? Mike, typically speaking, when we look at average volume days are common, right? But bigger than average volume days are not. And so most commonly, if we look at volume spikes like we saw here, these big volume spikes are not you, me, and the average investor. We are incapable of creating that level of volume, aren't we?
I wish I could. It'd be a lot easier. If I could create that kind of volume, I could actually, you could move stocks around a little bit, right? You could take more advantage of that. And I think that's the problem that we have, right? We're for lack of a better term, you're always kind of throwing an arrow in the dark. You just want to make sure you've framed out where you're going. to some degree. But yeah, I think, especially looking at this, right? So you bring up a great point. What is the institutional percentage ownership in the stock you're looking at? That's a great starter, right? To understand, like if it's an 85, 90% institutional held, then your point is 100%. No one individual investor, even a very large one, has enough power to kind of move that market. So you want to be paying attention to what the larger group, the consensus volume is doing, so to say.
Yeah, I like that explanation, Mike. Thank you so much. And thanks for sharing the rest of your ideas today, Mike. As always, love having you on a Monday. We're going to wrap it up there. But thanks to all of you for joining and participating. Big thanks to Cam there in the chat. Please follow Cam and me on X at Cameron May CS. And I, of course, am at Kevin Horner CS. I did post today a recipe for the tacos I made yesterday, which were phenomenal. I can't wait to get back to them for lunch today. But I know I've had some of you clamoring for that conversation. Check out my X handle there, so you can look that up. But I'll thank you all again for joining and participating. Hope you all have a fantastic Monday here, everybody. We look forward to seeing you all again real soon.